And trading has begun at the New York Stock Exchange this morning. We saw stock futures mostly higher, the Dow down about 10 points here to start the day. Joining us now is Jeffrey Kleintop. He is Chief Global Investment Strategist at Charles Schwab. We also have Brian Sozzi and Jared Blikre with us. Good morning to you all. Jeffrey, good to see you again. A lot of things happened overnight for investors to digest, including a big drop in global stocks, most notably in Hong Kong, where the Hang Seng sank about 5.6%. We have rising tensions now between the U.S. and China. Are you surprised that the U.S. market is holding up so well in the face of those things?
Well, we also had some maybe better news around potential vaccines. So I think that probably overwhelmed some of the geopolitical concerns. And the fact is that there was already a lot of negativity around U.S.-China relations. So the market isn't caught totally off guard by some of the things coming out of the National People's Congress.
Jeff, is the reality that this market won't price in this negative geopolitical news because of the Fed, and that investors should probably ignore any more geopolitical negative news?
I'm not sure. I think if this were to grow into something far bigger, maybe scrapping of the phase one trade deal between the U.S. and China, I think that's bigger than something that the Fed can heal. I also think that if China were to move in response to some of the concerns about Huawei and move to block some U.S. companies operating in China, I think that would also be a big negative hit that the Fed would find it hard to overcome. So the fact that China has chosen this maybe pressure release valve in terms of enforcing some new rules here on Hong Kong as a way to combat some of the U.S. Tensions, if you will, or some of the pushback against the U.S. is probably one of the maybe least market disruptive ways in which China could respond to some of the rising pressure from the U.S.
You know, Jeffrey, you point to a trend you're seeing in the market that defensive stocks have really been leading the way higher from our lows in late March. Usually you say cyclical sort of take that role on. What do you make of the fact that defensive stocks are leading the way this time around?
Yeah, it's really unusual. So it tells us a couple of things. One, almost every market low we've seen in the past, bear market, recession low, has been led, the rebound's been led by cyclical. So the fact that this one isn't either tells us, one, it's not the low yet. I mean, maybe we still have a new low yet to come, or the market is pricing in a recovery, but one that's very slow and very modest, and that just not enough momentum for cyclicals and the earnings associated with their economic sensitivity to really turn around. Hopefully, we'll see a trend break out here that does favor cyclicals. I think I'd feel more confident that the low is in if we started to see cyclical leadership. But that means that the May data that we're going to be getting over the next several weeks has to show a pretty sharp rebound and really mark April as the low point in economic data.
I just want to kind of build on that because we've been seeing some new stocks emerge as leaders. We have a reopening bucket. We have a lockdown bucket. I'm just wondering if you're noticing any specific trends in industry groups below the sector level, anything you like in particular?
It's interesting. One of the best performing sectors since the low is energy. Obviously, the fundamentals for the energy sector don't look great, but the expectations have gotten so depressed. I really want to watch those economically sensitive areas that are tied to industrials, areas like parts of the auto supply chain. I think are very important. We have heard that China's auto market is back, the biggest car market in the world. Mercedes-Benz has told us that. BMW has told us that. The whole part supply chain for autos is enormous and affects so many different industries. So I'd like to see that supply chain begin to show signs of renewed demand that we can begin to count on for a broader industrial recovery.
Jeff, we just had Walmart US CEO on, John Furner, and to me it sounded as if the stimulus checks have started to help the U.S. consumer, perhaps in a big way. Do you think those stimulus checks have pulled us out of peak crisis? I think that is a very important point or discussion that the market is having with itself right now.
You're right, and hopefully they have. I think if we look at this as maybe April being the low point, and we start to see a significant rebound, not just in economic activity, but things like foot traffic in stores, which is starting to pick up a little bit, rush hour traffic picking back up, people returning to normal, then I think maybe they have bridged that very difficult time period in March and in April here into May. If the recovery, however, is not robust, remember, this isn't just about a politician declaring it's over. It's about millions of people feeling they're safe to leave their homes again. But if in fact they do, then I think those checks have provided a very essential bridge to get people over this chasm and to the other side, and beginning to feel like they can continue the type of spending that and not pull back on basics, and not pull back on some of the spending areas that they would normally see if the recession were to linger much longer.
What's your feeling on volatility right now? Do you think that volatility is going to pick up here as we move further into the second quarter? And what's that going to mean for stock investors?
Yeah, I think every single data point is going to be extrapolated. So as we get perhaps a stronger one, the markets are going to embrace that as a sign of a stronger recovery. If we don't, then the hopes for a recovery are dashed. So I do think volatility will remain high, and that means the start of the summer, it could be a lot of ups and downs. We rebounded off the lows, but it gets harder from here as we have to determine the shape of the recovery. And not all industries will have the same shape. Some will be V-shaped. Some will be L-shaped or even W-shaped and head back down to the lows. So I think it'll be very difficult, at least initially, for investors to get a sense of exactly what this recovery looks like. And that'll likely lead to a lot of volatility. And it may keep individual investors somewhat on the sidelines. And we know that the big investors, the big companies doing share buybacks, aren't there to participate. So it could be harder to see gains from here.
All right, Jeffrey Kleintop, Chief Global Investment Strategist at Charles Schwab. Always good to see you. Thanks for stopping by.
Thanks for having me.